Welcome back to another episode of Palisade Radio. This is Colin Cattell. We're doing something a bit different this week by providing a midweek special update. And joining me back on the show is Rick Rule. Rick, I'm getting a strong sense of deja vu. I feel like I just interviewed you last week.
Well, I appreciate the opportunity to address your audience, Colin. Thank you.
So, Rick, the reason we're getting you back on the show for this midweek update is to talk about Sprott's plan for the $898 million hostile takeover bid for Central GoldTrust and Silver Bullion Trust. First, I want to talk about the takeover bid, but I thought that this could also provide a great platform for an overall discussion on ETFs and the difference between the certificated ETFs and the redeemable ETFs. But first, can you give us an overview of this takeover bid?
Yes, the central trusts were some of the earliest practitioners of certificated investments in precious metals, and in particular, some of the originators of the trust format. This is a useful discussion because the trust format differs from the ETF format in that investors are trust unit holders rather than ETF holders. And that's useful for Americans because capital gains for American holders in the trust format are taxed at the capital gains rate, while the ETFs are taxed at the collectibles or income tax rate. Now, as to the particulars of our bid, the Sprott product and the central product differed in a couple of fairly fundamental ways. The most important of which is that the Sprott product in certain circumstances are redeemable for physical gold and silver, while the central fund is not. The advantage of the Sprott architecture is that it allowed the holder to have an investment in certificated gold or silver that very closely mimicked or resembled the market for physical gold and silver. Because the central fund product was not redeemable, it has traded for most of its existence at double-digit discounts to the underlying asset value and to the price of physical gold and silver, which worked a substantial difficulty on holders that attempted to mimic in a paper market for their own tax advantages the physical market. Obviously selling something at a 15% discount to its value was problematic. And the persistence of this value gap led the largest shareholder in the central fund product, a money management firm in Canada called Polar, to begin the process of trying to eliminate or replace the board of governors at Central and to put in place redemption provisions identical to the Sprott redemption provisions. It was at that point in time that several other central fund shareholders suggested to Sprott that rather than have two competing products in the market, that Sprott itself should tender for the interests of the central product and simply make the Sprott product larger, which is what we plan to do.
So Rick, certificated and redeemable sound pretty similar in that in both cases, the gold is actually there somewhere in storage backing the full value of the ETF. Is that correct? The only difference is that in the case of Sprott, under certain circumstances, I assume based on how large your holding is in the ETF, you could call on that gold or silver and have it delivered to you.
Yes, that's precisely correct. We don't question the existence or the quality of the physical precious metals held by the central assets. What the critical difference between us and them is that our certificates are redeemable, and that very redemption causes us never to trade at a very significant discount. When it does trade at a discount, large holders like Polar, as an example, simply buy units, redeem them, and sell the precious metals and arbitrage away that discount.
This could be a question that you answer with pure speculation, but why would the group managing the Central GoldTrust be opposed to redeeming gold? What is the downside, I guess, from the ETF side on disallowing that?
Well, there's a small piece of aggravation in that redeeming means you have to do something. And managing a passive product mostly means doing nothing, which is much more pleasant and cheaper than doing something. Far more problematic from their point of view is that if you don't actively promote your trust and you sell at a discount, your net asset value declines. As people redeem, the corpus of the trust declines, and as your assets under management decline, so do your management fees. Sprott took the point of view that it was more worthwhile to have the highest quality product for its investors than it was to maintain assets under management. And the truth is, on in excess of $3 billion in assets under management, if my memory serves me correct, we've probably had $50 million worth of redemptions in 5 years. Unpleasant, but certainly manageable. The folks at Central Fund have been approached by unit holders about eliminating the redemption feature and about the discount for 10 years, but they haven't seen fit to take action. And as a consequence of that, we've decided to attempt to take some action for them.
Is there any benefit from an investor, or a speculator is probably the better word to use, on taking up an investment in the certificated ETF? And the reason I ask this question is because you conducted an interview last week with another group, and in the comments section I saw somebody make the comment to the effect of, yes, right now I can buy this gold at a discount of 5, 10, 15% through this ETF. However, when we reach a top of the market or we get into a bull market in gold again, that could actually flip around and the premiums on the certificated ETF become much larger. Now, of course, Sprott's ETF on the physical side did not exist back then, and I would think that that premium would exist more so on the redeemable side. But I wanted to pose that question to you from a listener from your other interview.
Well, in truth, Colin, when in 2011 Sprott offered up the physical silver trust, the Sprott Trust sold at a very substantial premium to net asset value. And while we appreciate the sense that the market felt that the Sprott brand deserved a premium, it was difficult for us to understand why the premium existed in the size that it did exist. A theoretical advantage that one could assume, and I want to say this is only theoretical, I wouldn't personally count on this happening, but if you were able to buy physical precious metals in certificated form in a trust that was selling at a discount to redemption value, and the premium, the discount actually turned into a premium, then of course you could, in theory, enjoy both the escalation in precious metals prices and the elimination of the premium. What we have decided in consultation with our shareholders is that the gold and silver investor who wants certificated gold and silver wants a few things. You know, when people buy physical gold or silver, they don't buy it at spot usually. They buy it at spot plus the dealer markup, which is 3.5% or 4%. And when they sell it, they don't sell it at spot either. They sell it at spot minus a discount to the dealer of 3.5%, 4%. So theoretically, a round trip in 24 hours could cost somebody 7%. The Sprott products, because of their liquidity and their New York Stock Exchange listing, have buy and sell spreads that are extremely small, less than 1/4 of a point if purchased through a discount broker or through Sprott Global Resource Investments. And so the first thing that the certificated products offer up, the Sprott certificated products offer up, are a lower fee option with regards to holding physical gold and silver. In addition, you don't have to pay for storage and insurance with regards to the Sprott product, because we hold and insure it for you. The third advantage, which I've talked about before, is for U.S. investors, the tax treatment. Shareholders of the trust products pay tax on capital gains, if any, at the capital gains rate, while holders of physical gold and silver and holders of the ETF pay tax at the collectible or ordinary income tax rate. Now, these advantages apply to all trusts. The advantages specific to the Sprott trusts are, as I say, convertibility, and as a consequence of convertibility, a very low discount to net asset value. But we think there's one other advantage to the Sprott product relative to any other certificated product in any other format in the world. And that is that the manager, the fiduciary of the Sprott product, is Sprott itself. And Sprott is public. And we think this is important because we think that many people own precious metals because they are concerned about the financial condition of financial services firms and the financial condition of governments. And expressing that concern, having a fiduciary, a steward, a manager that has an opaque balance sheet is probably not good practice. Any investor who wants to can look every quarter at the Sprott balance sheet, the Sprott income statement, because we're public, and see that we are very, very, very strong. $365 million in working capital, no net debt. I'm not suggesting that the management team behind the Central Fund product, which is the Spicer family in Canada, I'm not suggesting that they're not financially strong. All I'm suggesting is that because they're private, there's no way for me to know. And I think it's a large advantage for investors to know as much as they possibly can about the stewards, the managers of their assets. And again, here, the nod goes strongly to the Sprott product.
On that same point of protecting your metals, part of the benefit of having gold and silver is to not have that counterparty risk. And I guess the best way to accomplish that is to actually hold the metal yourself. But there are certain risks and costs associated with doing that. I want to ask you, the gold and silver held by the Sprott Trust is held at the Canadian Mint, if I'm not mistaken. The gold and silver held by the Central Gold Trust is in a private security vault. What's the reason for Sprott holding it at the Canadian Mint, and what kind of protection does that offer to investors in the trust?
Our shareholders, some of our shareholders, remember some of the scandals that took place in the 1970s when fiduciaries who represented themselves as holding gold and silver for counterparties, in fact, didn't, and absconded with the metal. And in other cases, physical gold and silver held in private storage facilities on behalf of investors experienced a bankruptcy. And it was a long time working out whose metal was who. We decided to store our metal at the Royal Canadian Mint because the chance that the Royal Canadian Mint would experience insolvency, it's a crown corporation of the Canadian government that has no debt itself. We decided that that was the most secure storage available to us anywhere in the world. It was important for many U.S. holders, although not U.S. holders, that the physical asset of the Sprott product be held outside of the United States. And of course, given the nature of the Royal Canadian Mint's operations, we like to joke that at the Royal Canadian Mint, our security is provided by NATO. That's a bit of a strong phrase, but you understand the nature of that expression.
Very true. And is there any plan in the future, or would it make sense logistically for the Sprott Trust to split the holdings up in more than one jurisdiction? Or is it better for a person, an individual investing in the trust, to take on the task of internationalizing their gold by themselves through different products?
I think that depends on the individual. I am not necessarily against people holding physical gold and silver as an alternative to our products. I would only tell people that it is only cost effective to do that in fairly large size. And the second thing with regards to holding physical gold and silver is I would urge you not to hold it on your property. This tendency to what my customers laughingly call midnight gardening exposes you to a whole different set of risks. We've had two different customers that have been on the wrong end of firearms as a consequence of holding physical gold and silver at their principal residence and letting the wrong people know that that was the case. With regards to internationalizing one's certificated interests, it's perfectly simple to internationalize your securities, i.e. your holdings in the Sprott product. But it would probably be improper for me to talk about other forms of internationalization.
Very well. And one last question for you, Rick. Is this takeover bid a symbolic move, or do you think there's a chance that this is actually going to go through? I'm sure there's going to be a good bit of resistance from the people making money at Central GoldTrust. So what's the chance something like this happens?
Well, I think it's really a function of whether or not the central shareholders pay attention and read the offering memorandum. The truth is that the arithmetic is pretty simple. You take a 12% discount and you make it a 1% discount or a 0.5% discount. If the holders of their product, A, can read English and B, can do arithmetic, and I know many of them, and the ones I know certainly can, I suspect we're going to prevail. It's very difficult for me to understand what the Spicer's family's possible defense could be. They've had a decade to make their units convertible and eliminate the discount, and they haven't chosen to do so. We did it right out of the bag. I think it's pretty obvious which management team is in better touch with the market and which management team has a track record of putting the investor's interests first. And my experience has been that if you do the right thing and if you offer up a large enough benefit, that the market will recognize it and you will be rewarded.
Rick, what is required for this to go through? Is it a democracy type 51% vote of shareholders? What's the mandate?
All I can say to that, Colin, is watch this space. Our offer will be on the street very quickly, and I think it'll amuse and interest a lot of people.
Okay, very well. Rick, thanks so much for coming back on the show in such a short time frame, and look forward to getting you back here soon.
Thank you, Colin. I look forward to it. I enjoy your questions.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen, or are you too stupid?